Good afternoon. Welcome to Options Tenors Tuesday. We have a short week this week. Thank you everybody for joining. I talked about last week the dollar, the 10-year treasury rate. We talked about VIX and all that leading up to the market topping. So we're going to revisit some of these here, and then we had a request for gold. So we're going to go through gold on the multiple time frames, similar to our regular analysis. So if you're new here, go down to that bottom right hand corner, hit that Options Tenor logo and subscribe. And thank you all for all the likes. The likes have been growing this channel just rapidly, and really love that and appreciate it. And we can get this information out so many more traders. So let's dive into it. We have the dollar, that's DXY, it's a Dixie. We have a bullish falling wedge into major support. We're starting to get a bounce off of there. We broke out of this consolidation today. This consolidation was about 8 days, 8 trading days, so almost 2 weeks of consolidation. We're breaking out from it. This has got legs. It's gonna move. We're getting our initial move now, and that's a negative correlation to the market. The dollar goes up, the market goes down. So that's going to be a headwind on the market. We got that gap, and so far a gap and go. So we'll see where the dollar goes to. The natural spot that I'm looking for is first maybe a pause at this consolidation area here, but really this resistance up above here. Where we go from there, it's hard to say, but my initial thoughts is we have a low here. We're making a higher low, and we, at minimum, in my mind, we're going to make an A, B, C correction to much higher levels around the 110 area, which brings us into this large consolidation area right here. So if we start to break above there, after some sort of consolidation, perhaps we can make new highs. That would be very, very bad for the market, but let's not jump ahead. We'll keep an eye at it throughout the days and weeks. So make sure you hit that notification button, and you can get these videos whenever I put them out. I try to put them out as often as possible. As soon as new information is out there, I try to get that information out to you. So make sure you follow these videos. It reads almost like a story. There's new information every single day, and we try to put that together for you to sort of project where the market's going to go, and we could trade off of that from there. Now, it's just an opinion, so make sure you do your own homework as well. So let's dive into the 10-year treasury rates. That's TNX. Now, very similar to the dollar, they've been correlated together. You see this range we have here. This move back here built this range. Now we're back on the bottom of that range. We had that falling wedge, came to support, broke out of the wedge, and back tested last week. Instead of the dollar went sideways, consolidated, this one actually retraced in price. So those are the two ways that we can consolidate or retrace when making a move. So we're making a higher low at this point. It will be confirmed over the looks like the 4.1. I'm saying 4.1. It says 41 on the right there, but that's actually 4.1% for the 10-year treasury rate. Okay, so we're getting the gap and go again, just like the dollar. That's going to put a weight on the market here. So we're going to jump over to, there's not much more to look at here. Very similar to the dollar. We had these highs here. I don't know if we'll get to those highs, but again, our natural point here would be a range play from the bottom of the range at the 3.84% up to the 4.3%. And so that's going to put again, a headwind on the market. So we can go ahead and go over to VIX. VIX, tracking the VIX, we have this large falling channel, tested it, 3 times. I do think we're going to test this channel again, and we may be on our way now. We have this range that we've been in really from back from November, the middle of November, and kind of tested this range. We're testing the top of this range again, and we're looking at this being a falling wedge, breaking out of the wedge. And in my opinion, this is an A, B, C correction here. And now we're off to the races to make new highs. And our first major test should be this 15 range. And after that, a range up to the 15 to the 19. If we break above this channel, we know that the market is taking a beating. And but I imagine we should reject off of it, maybe consolidate, and then move above there. But anything could happen if there's a market event, some sort of catalyst. We can actually blow right through it. But let's get to this 15-point area first, and then we'll talk about it from there. All right, let's do a little bit of analysis on SPY and then QQQ. Also, I want to check out IWM, and then we'll go over to gold. All right, so SPY on the daily time frame, you see this rising wedge. It's a bearish rising wedge. We're having trouble getting above that, and we're back in this consolidation area here. So let's see. The price action looks pretty weak at this point. Gap down. Tried to have a comeback here. I don't know if we're going to make new highs. We have divergences all over the place, so it's just very risky to be long here. Even if you're very bullish on the market, we still need some sort of pullback at this point. So the bulls and the bears should be looking for some downside movement, at least for now. Now we have this consolidation area. It's nothing but chop inside this area so far. So we'll see if the price action can just eke out a new high, or if we're starting our descent lower. We are in swing plays to the downside already. We have just a slight bit of protection onto the upside, and I'll show you that's actually an IWM. That would make the most sense for me right now. And we don't really need to take too much time on these indicators. I went through that last week, and they're just saying the same thing, just negative divergence. The momentum's to the downside, negative divergence. We have this sell signal here on the reversal, on the Williams R percent, which is our reversal indicator. Now, the one thing that we do have to pay attention to is that 8 EMA. That 8 EMA is our trend indicator. We're still holding that at this point, so we can't be too bearish until we start breaking down from, and the 8 EMA is right next to that 20 simple moving average. So we're going to kind of group together. As soon as we get below there, if and when we get below there, that would be our moment to trend to the downside. You notice before when we got below price action, that was just a correction. Got back above, so you couldn't really be too bearish again after that move. And so we played some protective moves to the upside, mostly with NVDA at that point, and that played out well for us. All right, so let's check out the Qs. Looking at the Qs, same thing, the bearish rising wedge. So I moved the wedge up here to these points, the top of the wedge, and it made more sense if we made a new high right here. We came to the top of there with our smaller rising wedge, broke down from there, and do we get a new high? We'll see, but we don't know. We're right on that 8 and the 20, just like the SPY, so we'll have to see what price action does at this point. Do we eke out a new high in the Qs? Retest the upper trend line again? That's possible, but we're not playing that. That's a little risky. We just have these divergences. If we get a new high, we're going to have another divergence, and all those indicators that we keep talking about. IWM. On the IWM, we had this large range that we started to break out from, which made sense with our Elliott wave count, and we're breaking back down. So that's a fake break. price action should be pretty gnarly to the downside, and it has been leading the market so far. Now, the reason why I picked IWM for a couple calls to protect our positions was it's the most bearish. We're under that 8 EMA. We're under that 20 simple moving average. That's apparent here. But if the market wants to bounce, I do think this one could go back and test the top of the channel range. And I think that would kind of lead while the Qs make a lower high. At some point, the Qs are going to turn and actually lead this market. So I think that's very risky to stay into the Qs. Now, we're going to have to keep an eye on NVIDIA and Tesla starting to bounce. So with those, with NVIDIA stretching out to all-time highs, we'll just take a quick look at it. NVIDIA at all-time highs here. We have, I'll show you on the daily. We have this range that we broke out from. So yes, there was a wedge that was forming. We got above that wedge, have a little bit more room to the upside. And I would say 600 is about the area where NVIDIA could still go to. So if the market wants to make a new high, then NVIDIA possibly could make that range here. Now, we have our drawing tool. We could just simply use the trend line. The size of this channel, that would be our measured move if this is considered a channel, and it brings us right up here to that 594, and we'll just call it 600 range. So from the breakout point, we still have some room to the upside for this measured move. Price does not have to make it up there, but that would be the target for this measured move for this breakout. So something to keep an eye out. That could kind of keep the Qs floating up. I'm not sure if we'll drag the whole market up, but I think IWM has the most potential to bounce. All right, let's go ahead and go to gold. We're going to use the gold futures. We're going to start from the monthly, and we're going to make this pretty quick here. I think this is apparent to me what the market's going to do. We've had these massive moves. We're forming a wedge. To me, this is a bearish falling wedge. Do we get to the top of the wedge and continue this move to the upside? It may be doubtful, at least for right now. At this point, the market on the monthly time frame is poised. It looks like it's poised to break out from an ascending triangle. But if you check out our indicators, we check out the reversal, Williams R percent, we actually have negative divergence on the MACD, RSI, and we're crossing down from the Williams R percent. That's a bearish setup. All right, it's contrarian move, and I call it contrarian for now because if we focus on the moving averages, we're still above that 8 EMA. Okay, but let's go down to the weekly time frame and see if we can confirm what's going on here. So on the weekly, we have still knocking on this trend to the upside. Hit it again. Can we hit it again? Maybe. We'll see if that happens. But this huge consolidation area, the bulls are really wanting to break out from here. It attempted to, came back down. We're actually, I would consider this a fake break at this point, and we're looking pretty weak on the on price action. We're actually getting underneath that 8 EMA, so we got to be very, very careful if you're a bull for gold. If we start breaking some of these lows, some of these minor lows, price may start accelerating to the downside. Now, gold has been somewhat correlated to the market lately, where the market goes up and so does gold. Well, if that still holds true, and we're looking for a reversal on the market and Bitcoin, and because of the strength of the dollar, this might send gold to the downside. Now, if we check out, again, our reversal indicator, especially on the weekly time frame, we're just so close to getting that bearish crossover on the MACD. RSI has a negative divergence with that new high there. And also, again, that sell signal from the Williams R percent. So don't just trust one indicator. We have the awesome oscillator. Again, bearish divergence. If you pull up the slow stoke, already sell signal headed to the downside. Okay, so just be cautious if you're bull. I wouldn't be a bull up here. I would look for a little bit better structure, and really for support resistance, I'd really keep a key eye on this 2074 high. If you can get above 2074, hold this as support, you have a fighting chance, actual fighting chance for this price action to move higher. But if we just eke out a new high, I think, you know, that might be it. If you're a bull, you can count this. If you're looking at Elliott wave, you can count this as a 1-2 and then 1-2 1-2 1-2, but that's mega bullish, and I would be very, very skeptical on that much of a bullish move. Now, if we get a catalyst and you see price starting to move again, that 2074 would be kind of a guideline for myself. Now, taking a look at the Elliott wave, I'm going to keep it right here on the daily time frame. We're not going to go all the way back, but I do believe this whole move here, that large move, was an ABC correction into a wave 4, and now we're finishing off with a wave 5. And there's two ways you can look at that. Is if this move was a 3-wave move for a 1, a 3-wave move for a 2, and then a 3-wave move for a 3, and then possibly this is a wave 4 where we're consolidating into a triangle, and you see that better on the 65-minute when we go there. And we have one more possible move to the upside. Now, earlier, much earlier, a few years back, we had a 1-2 1-2 setup, and so this could simply, if we're counting this as a 5-wave impulse, be the end of this wave for a 4-5, completing a lower degree structure, and then now a 3-wave move down for a 4 and completed at another 5 there, and this would be the completion of this move altogether. So just keep in mind that we either have a top or possibly one more sharp move up to the upside for a top there. Now, if we move down to the 65, and we don't have to look on the Elliott wave necessarily, you can see that this is forming into a triangle, where if this were the lower degree wave 5, we have a 3-wave move down for an A, 3-wave move up for a B, 3-wave move down for a C, 3-wave move up for a D, and a 3-wave move down for an E. So that would bring us, we can't cross underneath here for that to be valid, but we can come back down to the triangle, finish here, and then start our last move to the upside. So if this is a wave 4 and it's a triangle, then we have a little bit more price action to go to the downside, and then we have to form a little bit of structure here where we start heading to the upside for that wave 5. We start breaking down here, breaking these lows, and especially this low here, we have something else going on, and it's a lot more bearish, very similar to what the market was happening with the market. So that's what I have to show you with gold. We are bearish on the market. We don't know if we're getting that turn now or later. So be cautious if you're a bull. Other than that, keep watching this channel. Don't forget to like the video and share it with your friends.